Hi, Dan Ferris, editor of Extreme Value, published by Stansberry Research. And today's video is inspired by a book that I just finished reading for the second time, and I'm going to read it for a third time, and I recommend you do the same. And it's called Bull by Maggie Mahar. And it's a history of the boom from 1982 to 1999. And of course, we all know what happened after that. There was a big bust at the end of that boom. And in particular, there was one passage that I wanted to share with you. A fellow named David Tice, who was kind of famous for running a short fund, back in June 2001, he analyzed stocks from some of the biggest mutual funds of the time. American Century Ultra, Fidelity Growth, Fidelity Blue Chip, Janus 20, Putnam Voyager, Vanguard US Growth, Fidelity Aggressive Growth. You get the idea. They were the big mutual funds of the time, of the late 90s. Tice revealed that Cisco was held by 10 out of 10 of the funds, and Sun Microsystems 9 out of 10, GE 8 out of 10, Pfizer 8 out of 10, Microsoft 8 out of 10. You get the picture. These were the stocks that everyone thought were no-brainers. And all you had to do was buy them. It didn't matter how much money you paid for them, and you could hold them for the long term. There was a lot of talk about the long term in the late 90s. And you'd just make money and you'd be safe and it would be fine. Of course, what really happened? Well, if you bought Cisco at that time, you've yet to break even. 1999, if you bought Cisco at the height of the bubble, which I think Cisco's peak did come in 99, either 99 or early 2000, I don't exactly remember. But if you bought Cisco at the peak, and let's face it, that's when most people bought it, because otherwise there would be no peak, you have yet to break even today in 2018. Matter of fact, you're not really anywhere near breaking even. Not only was it not good for the long term, it was just the dumbest thing you could do at the time. And yet it was seen as the no-brainer investment of the time. And it's similar to the Nifty 50 stocks, Xerox and Polaroid and Avon back in the go-go 60s, the late 60s equity bubble that occurred at that time. Same idea. And so what happens is investors just, their imagination fails them. They can't imagine that these stocks will ever treat them wrong, ever. So they think it's okay to pay anything for them. And today, I promise you, I think even my imagination is having a tough time, but I admit that probably a lot less tough. I have no problem believing that Amazon.com can have a big problem, or that Facebook could have a big problem, or Google could have a big problem, or even Apple, which we do have an extreme values model portfolio, could have a big problem. All of these stocks can have a problem, but they're trading at valuations. I don't think Apple is in that category. It's the cheapest one by far of them. But they're trading at valuations that suggest that they're no-brainers. You can pay anything you want and you'll make money no matter what happens. I don't think that's true. I don't think that's ever true of any company. I think history bears that viewpoint out. And the simple fact is, nobody believes that, for example, Amazon or Facebook or Google can get cut in half, lose 50% of their market value, let's say, or 60 or 70 or 80%, like the stocks at the end of the dot-com boom that this book is written about that I want you to read. And this is just one idea out of this book. But it's loaded with stories, absolutely loaded with stories. Actually, I just opened to one spot here. I talk about the failure of imagination. Listen to this. The E-Trade ads of the 90s were beyond imagining in 1979. Well, the 90s are what, at least 11 years away from 1979, which can seem like an eternity in the stock market, but it's really not. It comes around faster than you think. And that's just another example of the failure of imagination, of how it manifests. And, like I said, the failure of imagination in the religion stocks, which is what they called them back in the late 90s. That's what a guy named Steve Leuthold called them. That's just one little story in this huge, huge book. And it's all about the people like Henry Blodgett and Mary Meeker, the internet analysts, And you come away from this book realizing that Henry Blodgett got a raw deal. He didn't do anything any much more wrong than anyone else. And matter of fact, he was more honest than other people. That was the only mistake he made. He wasn't as deluded. If he had been as deluded about the internet and valuations as other people, he probably wouldn't have gotten in trouble. And there's significant amounts of material about Alan Greenspan, about how he kind of screwed the pooch and didn't quite know what he was doing. There's an AOL case study. Of course, AOL and Time Warner combined. It was a huge disaster, one of the worst mergers in all of history. And AOL eventually turned out to be an incredibly good short sale. Similar to, I think, a lot of really high-flying companies today. Maybe Tesla is kind of like the AOL of today. They're not making money, and making money is nowhere in sight, and the stock trades at an enormous valuation. But the point is, I'm really excited about this book right now. I mean, I read it before, but I didn't really sink into it deeply enough, and I'm going to read it a third time. If you've ever read a book by Mortimer Adler called How to Read a Book, he'll counsel you to read truly great books 3 times. Once you get the sweep of things, the second time you really dig in, do lots of underlining and note-taking, and learn to understand things you don't understand. And then the third time you kind of read through and you synthesize everything together. And I need to go read Bull and synthesize ideas together. So I strongly, strongly encourage you to do that. And I think you will find that Maggie Mahar's book, Bull, could easily be about the present time. It's uncanny. And I'm going to leave it there because I want you to discover this stuff for yourself. I didn't want to go through and give a million examples. I just wanted to give you a little flavor of it and show you that it's a book for our time, even though it was written about another time. Okay, so enjoy Maggie Mahar's Bull, and I will talk to you guys next time. Bye.